Hey, Verl Workman here. It's Big V. We're talking teams. And the most important part of teams we're going to address today, and that is how to keep track of your finances and how to know if you're on track to make a profit. So many entrepreneurs focus on one thing, and that is how much money they're making, but they really don't understand how much they're keeping. You see, how much you make, your gross closed income, is what you get your awards for. Like, how many of you have gotten awards and you've walked across the stage and they've given you a plaque and you don't have any money in the bank, but you're getting some kind of an award? That's a normal experience for many real estate agents. 100% club, 200% club, diamond, platinum, chairmans. We've got agents at every level and every brand getting all kinds of awards and have no idea whether or not they're profitable. The only number that matters in your business is the amount you keep, not the amount you make. What is your net profit? And when it comes to teams, how do you know what's reasonable? Here's what I'm going to give you. If you'll watch this video to the very end, I'm going to give you what we call is our financial benchmarking system. It's a full downloadable spreadsheet that allows you to have a chart of accounts where you put all of your accounts in, and it gives you a benchmark on what percent of your business should be in each of those accounts. It's not the exact program, but it's close enough to understand if you're way out of whack on your financial benchmarking. Stay with me to the end. I'm going to give you our Workman Success financial benchmarking, which is the work of a lot of our master coaches coming together to teach financial intelligence, not only to our coaches, but also to our clients. So what's the goal? So first of all, the goal is to understand what the financial matrix are in the business. So people ask us all the time when they come into coaching, well, how much should I spend on marketing? How much should I spend on lead gen? What should be in my account for automobile? How much should I spend on client gifts? What should we spend on employees, administrative assistants, buyer's agents? What about tools and staff? What about all of the things that you do? People don't know what percent of their income should go in each of those things. So the goal is to gauge your business with a percent in each of the areas. And when something's way off, let's say, for example, that and I'm just going to use this as a number, that your marketing should be 14% of your gross closed income and you're spending 40%. What that does is it gives us an indicator that you're way out of balance. And so when we look at marketing, we say, okay, so when you spend $1 in marketing, it has to give us 6x return. If marketing is 40% of your budget, it means you're not getting a 6-time return in revenue. We have to figure out which pieces of marketing works and which doesn't, and then we focus on eliminating the things that don't work. We would have never understood that without the financial benchmarking system that you see behind me on the screen. So the goal is to gauge your overall business's competitiveness based on a whole bunch of other real estate teams and the financial benchmarks. We also look at efficiency and productivity. So for a team your size, team leader, 3 or 4 buyer's agents, how much a client care coordinator, an administrative assistant, or a transaction coordinator. There's some things that we've learned through benchmarking. Let me give you some of those stats. For example, one good client care coordinator, we call it a client care coordinator, that's an administrative assistant or someone who does everything. They do before marketing, put your packets together and everything. They do during the listing, they do transaction management, and they do after listings, client care, and then long-term value of the client touches and communication. So they're involved in everything, every part of your business. A good client care coordinator, based on our financial benchmarking, should be able to handle as many as 100 transactions a year. So if you're a full-time team, you've got 1 listing partner and 3 buyer's agents, and you're doing less than 100 transactions, you shouldn't need more than 1 administrative assistant. If you have more than that, then we have to look at what they're doing and whether or not they're giving you a return. Does that make sense? So understanding the financial benchmark, how much we're spending on a position for the amount of revenue being generated or the number of transactions happen, all of this becomes really clear when you start using the financial benchmarking. So there are 8 elements when it comes to financial benchmarking and what you should be tracking in your business to know whether or not you're profitable. So number 1 is you have to keep accurate records. Now this is so hard for us. Like as entrepreneurs, we like to just use our credit card and buy stuff, but we don't have accurate records of what it was for, whether it was transactional or personal. So it's really important that we track sales expenses, invoices, and receipts, and then we reconcile those with our bank statements. Number 2 is you got to understand the basic financial statements. So what is an income statement? What shows your profit and loss? An income statement shows the company's revenues and their expenses, their assets or their liabilities at a specific point in time. It's important that it's at that point in time. Those are your company's assets, liabilities, and expenses. A cash flow statement shows the source of cash and what's coming in versus what's going out in a period of time, so you can anticipate if you'll have enough cash to meet payroll, to pay your bills and expenses based on what's coming in. I meet with my internal accountant once a week and we look at our internal cash flow, knowing that we're making payroll and that we're putting money in savings and that we're allocating dollars for taxes. If you don't pay attention to your cash flow, your cash gets out of whack. Number 2 is understand basic financial statement. Number 3 is monitor cash flow. I just talked about that. And that is the monitoring of your cash flow. We do that every single week. It's the lifeblood of the business. We don't use cash flow the same as understanding our profit and loss. Profit and loss is a profit margin that we're seeking for at the end of the year. Cash flow is making sure that we have enough cash flowing through the business to be able to be liquid, to cover the expenses and meet the obligations, and to also invest in our potential growth. The next thing is analyzing profitability. One of the things that you'll really appreciate in the financial benchmarking is the profitability. Here's the basic benchmark. As a real estate team, you should run your business at a 50% gross profit after your cost of sale, meaning after you pay for your agents and for their commissions and for generating the leads, the cost of delivering that business, you should be at a 50% gross profit. If you're paying 50-50 splits and then paying all the expenses, you can't be at a 50% gross profit. If you're paying 70% or 80% splits to your agents, you're not even in the ballpark. You can't even get there. And so what happens is you end up doing more of the personal transactions because you can't afford to give your agents the A leads because you're overcompensating them and there's no profit margin in your business model. And so understanding that helps you make better decisions on how do we pay people. So analyzing your profit. And we also want to look at margins, ratios, return ratios. We look at managing working capital, and that's how much cash do we have. Sometimes it goes up and down. As a real estate agent and in my business, I like to keep 6 months of operating capital in reserves all the time. When you have 6 months of operating capital in reserves, you could not sell anything for 6 months and pay all of your bills and keep all of your people and everybody's okay. That 6 months of operating capital is what creates stability and security for your team. The other thing is really important that you understand what it takes to break even. If you know that your expenses are X, that means you have to sell a certain number of homes with a certain amount of profit every single month in order to break even. And if you're going to be going in the hole, you need to know you have the cash flow to cover it from your reserves. And how many months are you willing to go in the hole before you make course corrections and change some of your expenses? Understanding this financial intelligence is so important as a leader. The next thing is to track your KPIs. I would say that here's some of the things you want to track: sales volume, number of units sold, average sales price, conversion rates, days on the market, listing to sell ratios, cost per lead acquisition, agents performance. We want to identify and monitor these key performance indicators. We use companies like Sisu that give us unbelievable data when it comes to tracking key performance indicators and tracking those things. While KPIs for real estate in a small business can be a little bit overwhelming, they're the most critical thing, because if you're not hitting the activities that generate the results you want, you won't have the money to pay your bills. And so we focus on tracking the activities that create the results, not just the gross closed commission. And then number 8, okay, you guys ready for this one? Sorry, but I need you to separate your personal expenses from your business expenses. A lot of realtors like to put everything together and at the end of the year try to figure out how much they owe in taxes. Create a business set of books and then create a personal set of books. Pay yourself a paycheck to cover your personal expenses and do the things that are legally acceptable to run through your business, but keep track of those things and have a very clear set of books that separates personal from business. Real estate KPIs can be a little bit deceiving when the owners don't act with integrity on how they work their personal expenses in the business. A couple of Verl tips, big V tips that I'll just give you as we wrap this up. Number 1 is I want you to make decisions based on data. As a leader, it's time for you to stop making your decisions on whether to hire someone or let somebody go, or whether we expand or contract or add a lead source or don't add a lead source. I want you to make it on data. When you have the right data coming in, you make better, intelligent decisions. The next is when you see my benchmarking and you see my recommended benchmarks, you're going to say things like, well, that doesn't work for me. I want you to ask the question differently and say, how can I make that work for me? What would it look like in order for that to be true for me? And so instead of saying it won't work for you, ask the question, how do I make that work for me? It's all about turning insights, getting a different perspective into action and figuring out how to make things work for you. And then the last thing when it comes to really financial benchmarking and KPIs is that as a leader, you owe it to yourself, you owe it to your team, and you owe it to your family to inspect what you expect. Financial intelligence is hard. It's a life study. The longer you do it, the better you get at it. The more consistent you are, the better you'll become. It all starts with having a benchmark. And I wish somebody would have given this to me when I started. So I'm going to give it to you today, right here, the bottom of the video. I want you to download Workman Success Financial Benchmarking System. It's my gift to you just for being here. Share it with others. Help people get more in financial intelligence in the real estate market. And let's focus on the number one most important thing, how much money you keep versus how much you make.